It's my pleasure to be with you this morning. I hope everyone is well recovered from last night's events. It was tough walking around yesterday, and everyone kept on saying, "You the guy paying the bill. You the guy paying the bill." Like, I don't know, am I paying the bill? But hopefully everyone is all recovered, all energized. I think this morning was also quite a very good set of two panel discussions. And today I'm going to talk to you about something that I'm really passionate about. And this really speaks to the whole point about the role of non-banks in building the next generation payments ecosystem in South Africa. So I hope at the end of today, you'll probably be, you'll understand how we're expanding acceptance, how we're widening access, and also, of course, building a whole and embedding trust. Now, it's why do we do what we do? I think the first point maybe one needs to start to cover first is that it's around, let's maybe delve in a bit around SMEs, because that's an area where we've found growth, where we've seen our role as a payments enabler come alive. And it's important maybe to just quote out some stats. So I'm not sure if everyone knows that the level at which SMEs plays in not only about providing employment in the economy, but they're truly the engine of the economy, right? Where SMEs fail, the economy fails, right? If SMEs do not thrive, the economy doesn't thrive. And for us, that's an important piece to always take into account before we even think around why do we do what we do. Now, the and why do I say that? I say that in the context to say when we think about payments infrastructure and we think about how do we build, capabilities, tools that enable payments, we are always thinking about how do we solve problems that enables SMEs to thrive. And for us, that is cash flow. Cash flow is the oxygen, if I were to use that analogy, is the oxygen of any business. Liquidity is the oxygen of any business. Now, when you think about payment rails and you think about whether through legacy payment rails by banks and you think about the role that fintechs have played in building out payment rails, and I'll quote a few examples that come to mind from an industry perspective, that they were all done with this very one core mission that says, how do we ensure that in the same way as what cash does, we build digital payments ecosystems that allows SMEs to thrive, right? That allows SMEs to have access to liquidity. And you will, and I think I want you to park that point because when we talk about just and I grew up in banking, right? And when you're in banking, you are always engraved with this term, systemic importance, right? What does that mean, right? Systemic importance is that if you fail, your impact is wider than just your local, where you function. Now, where we think about this whole notion of liquidity and the role that fintechs have played is that when we started out, enabling some SME to accept digital payments, dropping a point of sale terminal in some far outlying part of the country, no one ever thought that there will come a day where fintechs will be considered as part and parcel of what you define as systemic importance, right? Because, and I see a lot of faces of people who are running payments like PSPs, is that when one of those PSPs goes down, you feel it, right? So park that thought around just the importance of fintechs. Now, the other side of the story then talks to the emergence of digital commerce, right? And this is, for me, probably the one area where fintech's role in driving and being, a key enabler of the next generation rails of payments has been truly demonstrated, right? You think about it, right? And I specifically use these statistics. If you're close to this industry, you'll know this is outdated, right? You'll know it's very much outdated. We will hit 100 billion if we haven't done it by Q1 this year. So it's done and dusted. So it's an area that is continuing to grow and is growing because of the investments, the capabilities, the rails that PSPs have built to ensure that e-commerce is instant. And they've built it and facilitated the growth. We've seen, I mean, you go a couple of years back, the very idea that I will sit on my couch or sit in this conference, somebody's sitting here on their phone, they've got an SMS that they've ran out of 1, 2, 3 at home, that they could sit in a conference listening to someone talking about digital commerce, and they can actually take the action of executing a digital commerce transaction. That wouldn't have happened if, ourselves, colleagues in the industry, didn't invest time, effort, energy to understand what are the use cases do we need to solve for, and what are the areas in the payment rails that are lacking, and the solutions we need to build. So it's something that, for me, again, just highlights the fact that when you, again, look at payment service providers and non-banks, it's not about just looking at the fancy screens or the fancy solutions we provide. It's again thinking around that we are truly embedding ourselves on a day-to-day basis to what truly matters to the populace of South Africa, what truly drives the economy of South Africa, right? This is now, we debate the numbers, but this is probably, in my view, 10% of retail trade is digital commerce, right? Which means, and 10% is a significant portion of any statistics that you look at, and to see that vertical is truly supported, embedded by PSPs and non-banks. For me, it's again shows that there is a role that non-banks play in this ecosystem. Very good examples to talk to is, and I put this brands here, not because we all interact them, and there's some who have strong opinions of whether good or bad, or that's not for today, right? Today it's around, again, you think about just let's talk about our local marketplaces, right? So the Takealots, I guess the Amazon, the Macros of this world, what they are able to deliver to customers today, it's delivered through the very same payment gateways that we built, the very same payment clearing products that we built, the very same shopping carts that we built, and that wouldn't have happened if PSPs, non-banks, truly invested themselves in that. How do we ensure that commerce thrive, right? And what then complicates things further, then you got these global PSPs, global marketplaces that come into South Africa with their own unique requirements, right? Whether it's trading global, local settled, or cross-border settled. Those are the things that 5-6 years ago we never even thought would be realistic or would ever happen. We've rallied around. We are able. You could sit, shop on Shein, multiple APMs, transactions are cleared, processed, no challenges, and again showing that what traditionally we would have said, oh, but that's the realm of financial services. That's what banks do. PSPs are doing that. PSPs, non-banks, if they go down, and because I'm always, when I talk about the role of and I'm going back to the title of the discussion, is I want to always link it to the very idea that what I want us to walk away with is that from here on, we should not be looking at PSPs or non-banks as from an outsider point of view. You need to start looking at them as part and parcel of the value chain. That start looking at them as part and parcel of what is defined as systemic, entities of systemic importance. What is defined as entities that could, when they go down, there will be, some challenges with how the economy functions. I have a very good example my role allows me to, I look after multiple markets, and one of the markets which always fascinates me is that, and I've seen it evolve, is that in Kenya, everything is done through mobile money, right? And I think it took a couple of, because mobile money was always sitting as an outside telco payment method that no one really, took seriously. I think it took a couple of down times where mobile money, so the Safaricom mobile money platform goes under or just goes down for an hour or two, for the central bank to actually realize that if that system is down, there is no economic activity happening, right? But it was being looked at as an outsider to say, no, no, but it's mobile money. It's just, mostly people are doing P2P payments, and all the money will come back to the banking world until you start seeing the systems going down every so often. That you know they've changed tune. They actually now regulate mobile money. They regulate mobile money in the same manner that they regulate other payment methods, because they understand the systemic importance of that, right? So the idea is, what we do today as non-banks and payment providers is that we have moved from being what we traditionally call a rapper, the cool-looking guys, the guys with T-shirts, guys who don't wear suits, guys with sneakers. In my organization, my colleagues always laugh at me because we run two businesses. The one business, you have to wear a suit because you're selling to banks. The other business, I'm a fintech. I wear a T-shirt. So we are always referred to as the rapper around, if you were to call it that, right? And that's what I'm trying to change in my approach, to say, no, we're not. We know as much as required around. We've built enterprise-grade APIs, secure APIs that ensures transactions are processed at scale, right? We sit, and we've already done those plannings, periods like Black Fridays, festive year end. We've built scalable solutions that allows a trade happen seamlessly. You will find, you will hardly ever find, and I speak this of pride, PSP is going down on that day. You'll find, the old legacy struggling to cope with that level of demand, right? We've integrated the very notion of whether it's technology like tokenization. We're very passionate about fraud management. So the very same things that were traditionally looked at as in, hey, this is outside of the realm of PSPs or non-banks, we are building that, right? Last night, Rahul and I are very good friends, but we compete fiercely. We're busy sharing notes about his conference that he attended in India, and they're doing some exciting stuff there. And these are not banks, right? Companies that are using next-gen AI to look into how, one, what I call a card solution in a box, right? You can build a bank in a day, and you there. You can actually build AI models sitting here in South Africa on a cloud infrastructure in India and deploy it in a day, right? That is not being done by legacy. It's been done by new fintechs that are investing in that infrastructure. Now, I think the other piece, and I want to zone in maybe on something that really shows the level at which fintechs will transform the next generation of payments infrastructure. And I think this is our where we embrace APIs, right? And I've pulled a few examples where I believe there's significant opportunity in what APIs will deliver in terms of call it payment technology evolution, right? A very important topic that I spend a portion of my life on, faster payments. I think that is going to scale at pace when the industry at large truly embraces the idea of open APIs, easy onboarding, easy access, and allowing not only traditional players but non-banks to innovate around it, to innovate around that payment rail, and find in the same manner that we opened up e-commerce, which traditionally banks were not there, in the same manner that we opened up SME payments acceptance. where banks were not even there, right? In the same manner where there is, micro informal bank accounts that colleagues in the industry have managed to scale up and monetize, I see big opportunities there. I think if you think about just uh, and that mobile money example was a good one to use. Is South Africa's equivalent of mobile money is vouchers, right? You know, and I look at my central bank colleagues and I say, that's you think vouchers by themselves. It's not something that's outside. It's within the ecosystem, right? It's not, and it's also not about suppressing it. It's about how do we embrace it. How do we embrace it as the next generation of alternative payments methods that are being embraced by consumers and industry alike, and how do we bring that into the ecosystem, right? I think that the other two really speaks to, more us to our customers around just how we offer seamless, easy solutions, either for payouts and allowing them to, to get access to the national payment systems. But I think what I'm saying here is that APIs and simpler connection is what's going to drive faster scaling of next gen solutions in the payments ecosystem. The other one that is will definitely do that is it's digital wallets, and I spoke a bit ahead of myself, but when I was thinking digital wallets, I was thinking not only the traditional wallets we know, but also these vouchers that are emerging in the country. The fact that yes, we now have fully tokenized, fully digitized payment wallets in the form of Apple, Samsung, Google Pay, and the likes. Somebody sitting in this room is probably going to innovate on the next tokenized, digitized pay shop wallet of sorts, right? It will come from this room because this is the innovators, and that's why that point around account to account is to say, hey, we solve for card. Watch this space. Fintechs are already looking into saying, how do we deliver a seamless account to account payment solution? Because going into my banking app, finding my account, and then that's never going to scale, right? So it's what's coming next in that. And how do we leverage QR codes, right? I think we've had our first generation of QR code. When I look at some markets where we operate, I'm starting to see the the next wave of QR code, right? Pay-at-table solutions that are integrated to loyalty, integrated to other, data-driven solutions to connect customers and merchants into a singular solution, right? So again, the point is, inclusion at scale is only possible when payments are made mobile first, right? And that's the challenge that I believe we've set ourselves and we drive in that. Now, uh, what is driving us to innovate, right? It's a lot of forces. I'll pick a few. I think, if you just think maybe probably the security and a lot of those, if identity theft, AI-assisted fraud speaks to security, right? It's again taking us to a point where yes, we are now part and parcel of the payment ecosystem. How then do you innovate to ensure that customers trust you, right? That you don't have the perception that, hey, because you're an unbanked, you're a PSP, you're not secure, and so on and so forth. So we very much embrace the use of biometrics, right? I do believe that biometric checkout is just in its infancy, and that is going to scale. We're already using tokenization that I wouldn't invest a lot of effort talking about because that is we live with it today. It's no longer an innovation; it's an everyday an everyday thing. I think what is probably the most exciting part about it and talks to, it's one thing for us PSPs to say, hey, we part and parcel of the core. We're not a wraparound. Is we don't like the way compliance is done today, right? We're already thinking around how do we automate compliance? How do we automate whether it's scheme compliance, regulator compliance, you look, how do we ensure that we do it in a competitive manner that is at a pace faster than how the traditional incumbents do it, right? And that's I think it's an area where, and it's not about going around the need to comply. No, no, it's just around there's a better way to do it, right? And that's somewhere that's an area we're looking at it, you know, and then real-time analytics. I think for me, that's where next gen AI, it's gonna play a big role around just providing that level of analytics, not only to, whether it's around, you picking up a level of fraud or risk and taking an immediate action at a point in time. That is something that we're seeing as picking up, right? The other piece that for us speaks to, again, the role where, I mean, and all of these topics. So so I've spoken about fraud. I've spoken about just the infrastructure piece, which is the APIs and all that. There's this whole idea called embedded finance, right? Again, you go a few years back. Lending was again the realm of banks, right? And a few regulated lending providers, right? Where are we today, right? You have a plethora of innovative lending products that are leveraging data to make decisions that not only allow, and going back to my earlier point, SMEs, consumers alike, to have access to funding, to liquidity, to buying power at a point of transaction, right? So this is, again, an area where we were not part of it, but we're driving its innovation, right? I feel like the traditional lending incumbents are actually playing catch up, right? Because, I use personal examples. Somebody yesterday asked me to send my 3 months back statement. I actually had to figure out where do I get it in my app, right? Why? Why am I able to get credit from next-gen fintechs without having to send that? What data do they have about me that tells them that, I'm sure I'm a bad risk, but relatively somewhere there, he will pay, right? So I'm using those examples because this whole idea of that fintechs are on the outside is going to have to change. We are sometimes leading the innovation. So in embedded finance, banks have to change their act, or I'll just say incumbents, because not only banks, these legacy lenders, have to catch up and follow up fast. Because if they don't, the very thing that defines what is a bank will be externalized. You will get the $1 billion, $2 billion valuation fintechs that are focused purely on next-gen embedded finance. I'll leave it there, right? A lot is happening on data, and where fintechs have built models, engines that are. This example about lending is exactly what I'm using to say, you don't have to send the information, right? You fetch it. Today, we onboard merchants in minutes, right? I don't ask you for your ID copy. I don't ask you for your business registration details. Just need a few details, I'll go fetch it. And I'm not connecting to fetch the data that speaks to your KYC. I'm not connecting to the DHA or any of the. I'm connecting to a fintech or a infotech, if you were to call it that has amalgamated that data, and it's enabling us to then shorten the onboarding experience. So it's those things that I just want us to start to think about and say, if we are always thinking that fintechs are on the outside, in most cases fintechs are leading the all of these themes and ensuring that innovation is happening, and it's happening at a pace at which it benefits SMEs and consumers. Now, I want to maybe talk about what I see happening in the sort of next 12 months. Could be wrong. The timeline might be longer, but these are ideas, that I think will change. And if I mean that is what I've said previously, it's already happening, right? I do see, and this is because of passion, right? I have a strong passion around the fact that we have just scratched the surface with account-to-account payments. Uh, the beauty of it is that, and Pradeep mentioned it in the session, the highway is there, right? The N3, the N1, the national road is there. We have the infrastructure, right? Now, we need to build those tributary roads, right? And that tributary is what we need to scale account-to-account payments in both the online ecosystem and in-person ecosystem, right? We need to embrace the idea of open banking in whatever. I'm not going to debate the definition of what open banking is because we all interpret it differently, but the idea of an open banking in the sense that making it easier for consumers, merchants, to exchange data in a trusted way, right? And whether it's banking APIs, whether it's is the rails that we will start to use on account-to-account payments, that's something that we have to think about. Uh, risk is always going to be an important element, and I'm talking about how do we ensure that when we start to think about risk, it's interoperable, right? So that we're sharing learnings amongst each other to ensure that the ecosystem collectively is secure, right? We all love digital wallets, but they normally fail when they are not interoperable, right? And we've got many stories of those that have failed, right? Whether we talk about, mobile money send and all that, not everyone likes to go to an ATM and withdraw the cash. We passionate about where vouchers are going, we need to start making them interoperable, right? Because the industry cannot have, I can't afford to integrate to 20 people. Just the bandwidth is not there, right? So interoperability is something that we need to start thinking about and ensure that happens. I think the last one, which is quite big, is that, and again embracing the point that we're no longer on the outside, right? We inside. We are, it's in a very informal way. We are within, So it's no. Let's go in better bit. I'm very excited. I think the approach that the central bank is taking around just rethinking regulation and rewriting regulation to ensure that all participants in the payments of financial ecosystem have some level of regulation and visibility, right? It's really an exciting path, right? That they need to be licensed, an incremental licensing relative to what they do. I think that's a very, very important thing that we should all be excited about. We should all embrace. We should all make sure that we participate, give input, shape it, because we don't want to be 5 years from now when it's set in stone and we say, but it's terrible. We all have an opportunity to get involved and embrace that, because the power of it is that it's really changing the perception at which fintechs were looked at historically, not only by bank partners but also by the regulator. So that, I think, is something that we have to be very excited about. And hence I put it last because it's something that really, I think, will change the perception of what and will allow fintechs actually to do more, right? Will allow us to innovate at scale, will allow us to innovate with freedom, right? Because then because then at least we have a little bit of understanding where we stand. So we're not worried about, hey, is this really allowed, or can I do this and that, right? So, and I want to leave some time for questions. So I'll close it from here, where I say, how do non-banks transform Zanzi's payment rails, right? So, first point, collaboration. Now, it's why do I say collaboration? There are, as much as in the previous point I said regulation is changing, doors are opening, will be on the inside. One should never underestimate the fact that scale, innovation, it's going to happen when these three parties collaborate. Call it incumbent, financial system, banks, or you call them that, the regulators, and fintechs. Why? I do not underestimate the scale at which incumbents have built, right? So they bring scale to the table, right? Regulators generate a sense of trust, right? They create a sense of trust. They create that equal playing field. And third, we like to believe we bring agility, right? So now where you combine scale, trust, agility, there's just it's a very good melting pot of the next ideas that will take South African payments ecosystem forward. And that, I think, the first point is we will continue to collaborate. We should continue to collaborate as an industry at large, because that is the way to win. When I speak about design for access, it's around the fact that we are solving for consumers, we are solving for SMEs, we're solving for businesses. I use the example of SMEs. We should be thinking around, how do I make it easier for them to consume, to use it? I will speak this frankly. I was part of the process. We did not design PaySharp for access, right? We made it difficult, right? And we can fix it. And I think Pay Inc. has started by fixing the name, then it will fix the user. So that's for my former Pay Inc. colleagues. But when I talk about access, is that when we design the solutions, you will scale if it's designed for access, if it's easier for consumers to use, if it's easier for customers to consume, SMEs to leverage, SMEs to roll out, you will win, right? My humble plea is that as we are, within the payments ecosystem and are fairly recognized as active participants, systematically important active participant, as much as we relook in the regulation, it needs to be fair, take into account relative sizing of what role each of the entities play, the fintechs, the banks, the incumbents, and whatever, and ensure that it's also equitable, right? So the very idea that there are this, non-banks here and there's banks there, that will progressively have to crash, right? I'll leave you with that, and we say if the banks build the first rails, the checks, the ATMs, then non-banks are building the next, right? So we've off the first rails, by the way, so we never discount that. We rode on what legacy built, expanded on that. Now is the time to collaboratively come together and further expand that and ensure that we take South Africa forward. And I think that's the essence of this conference, right, is to say together we want to move South African payments forward. So I want to thank you. Happy to take any questions. And let me refresh here. I think it's 40 questions. Good. So please allow me some time to just read. I'm not choosing. I'm gonna, yeah. Yeah, so I think the first one, and I'll call out people's name because there's none. So Mzwake is asking, in what practical ways can fintechs or non-banks take advantage of direct participation once the amendments to the NPX Act are promulgated? Okay, that word. We shall deal with it. So I think, I mean, there is no other practical way than being connected, right? So whether is an because there's multiple elements of the NPS Act that has been looked into, but I'll use a pay sharp example, right? Because something that I'm passionate about is today I'm very desperate to switch on and enable pay sharp onto my payments infrastructure. I have the journey, it works today. I have the merchant settlement rails, they work today, but I can't get on, right? So whether the regulations define that you have a specific shop ID or for non-banks, or we are also connected, it's that's it. And in addition, yes, there are some fintechs that will have the financial muscle, for example, a pre-funded settlement that will participate directly on pre-funded settlement, right? And some won't, and some will still use the existing. So for me, you have a lot of fintechs that are ready, that are saying, or non-banks that are saying, whatever the rules you define, we'll play by those rules and participate. Okay. Okay. So Levuan is asking about how do you envisage interoperable vouchers from a digital wallet interoperability perspective? This one is it's a tough one. I'll tell you, because it feels why I say it's a tough one. We're still in that very first phase where QR was, right, where everyone is building their own branded voucher, right? So you have the one voucher, you have the X voucher, the two voucher, three voucher, and you call all of that. So when I speak about interoperability, is as a payment service provider, I need common messages, right? What do I by common messages is that I should not integrate to the very same integration layer I enable. Because, for example, if I use card, for example, and I enable card, okay, on my payment, I don't go and enable an FNB card, an APSA card, a NetBank card, credit, debit. That's what I mean by the practical interoperabilities. As an industry, we need to go and sit and define that common messaging layer that allows payment service providers to then integrate once. That's how once you do the integration, you've got a common, then you build a settlement network that is interoperable, right? That's the very same way. And the infrastructure, I mean, we must never underestimate the switching infrastructure we have in the country. Paying has all of that. And this is what they're building for the future, is to say we're no longer just about cards and everything that is an exchange of value. We, the market infrastructure, that should be able to switch it. Define the rules and you go from there. Okay? Where do you see fintech and banking industry in 2030? I mean, that's like next week, man. It's nothing. If it's within your 5-year plan, it's not very far. So I think we'll be in the early phases of the new NPS Act. I do hope that we'll be collaborating far better in 2030. But I'm also quite realistic that we'll still be very much filling each other out. I think, if you were to call it that we'll still not be at the level where we truly see that, you know what, yes, in the 300 PSPs, there's maybe 10 that will introduce risk. It's the same way we've had many bank crashes, right? They've happened. Doesn't mean that one industry is better than the other. I think I've got a minute, so maybe I can take 2 more. Okay. So this is from Vejo Shikongo. He says, usually non-bankers do not like to be called non-bankers as they feel like they're excluded. What is the right term to use? Is it really exclusion? No. Not for me. All right. We are payment service providers. We are part of an association. We don't call ourselves an association of non-bankers. We are an association of South African payment providers. And because that's what we do, we provide payment services. So that's probably the right term. I think that's it. Yes.
Thank
Yes. Thank you.